The JSE is weak so far, while global markets are mixed as investors focused on the lack of progress of U.S. debt ceiling talks, which have heightened fears of a default. Locally, of course, the attention is on the Reserve Bank's Monetary Policy Committee. They're scheduled to announce their decision on interest rates this afternoon. Wayne McCurrie is FNB Wealth and Investments Portfolio Manager. He joins us now for the latest market moves. Wayne, thank you very much for your time this afternoon. Let's start with an overview of how the local index and the rand are faring so far at midday trade ahead of the interest rate decision.
Well, look, the market's actually only slightly negative, so that's a good sign because we've had 2 bad days, and the recovery is really coming from the shares that fell yesterday. So it's mainly the mining shares that are up, but only a little bit. The rand's actually a tiny bit weaker, trading at 1933, up from about 1920 yesterday. So the market is waiting for the interest rate decision. I mean, really, it's going to be very important.
And if you take a look at your crystal ball, what are you seeing? Because the rate hike is widely expected, of course, but the question is how high will the governor go?
And I think, look, our governor is a very conservative governor. He's been an extremely good manager of the monetary cycle over time. So unfortunately, I think he's going to do what's necessary to stabilize the rand, to bring down inflation and increase interest rates by 0.5%, same as he did last time.
Okay.
Unfortunately.
Yeah, unfortunately. Let's take a look at news from Tsogo Sun Gaming. They've published their results and cash dividend. How did they fare?
Look, I mean, Tsogo, surprisingly enough, all of the, let's call it the entertainment industry businesses are actually doing quite well. So quite a few of people in this area, casual dining, entertainment, and that have come out with results. And Tsogo's, it's not bad. I think the market was anticipating the results, but they seem to be doing maybe even slightly better than what people would have anticipated, given the state of the economy. Because, as I said, all the companies in this area are actually doing reasonably well.
Lewis has also published their results for the year ending 31 March 2023. A good performance?
Look, the furniture companies have taken an enormous amount of strains. Anyone who's in the furniture side of the retail basket, the retail sector, has unfortunately been doing badly. So when you look at their turnover wasn't up, their earnings were down, but the market was anticipating that. So there wasn't that material a move in the actual share price.
Okay. Stefanuti stocks results for the 12 months ending 28 February 2023 are also out. What do those look like?
Look, unfortunately, Stefanuti was one of the building and construction companies. At least they've survived. At least they are still here. But, I mean, the building and construction industry has been in dire straits for many, many years. And this share price has been pounded. I mean, absolutely destroyed over the last, maybe even the last 15 or 10 or 15 years. So even though the share price is up today, it's up about 20% last time I looked, and they have moved from, they obviously wrote off everything and made provision for everything into a profit. But this is really a small company nowadays, and very small volume can change the share price quite significantly. So even though the share is up 20% today, I mean, on the last 10 years, it's probably still down 98%.
Wayne McCurrie, FNB Wealth and Investments Portfolio Manager, thank you very much for your time.